You are listening to The Vocal Technologist. Spoken Tech for your ears.
Welcome, everyone. We're going to explore some really significant shifts happening right now in financial technology. We'll try to pull out the key insights, maybe even some surprising bits for you.
Absolutely. The goal here is, cut through the hype a bit, understand what's really changing in how money moves, how it's managed, and how it's secured. There's a lot happening.
There really is. Okay, let's unpack this, starting with payments. There's this huge new thing called PayPal World.
Right.
It's basically a platform connecting major payment systems. Think PayPal, Venmo, Mercado Pago.
UPI in India, TenPay Global.
Yeah.
Yeah, the big ones.
Exactly. And the scale is just massive. Nearly 2 billion users potentially connected. It lets people pay across borders using their usual domestic wallets.
Which is huge for users. And think about businesses makes it simpler for them to accept all these different payment types without much fuss.
It really does. What strikes me is how it seems to quietly dismantle the old banking rails for these kinds of everyday transactions. It's like creating this whole new global payment layer.
It is. It bypasses a lot of the established players, doesn't it? Which kind of raises the question about PayPal's bigger strategy here. What is the play?
Good question. And how do the traditional banks even respond to being, well, circumvented like this?
Well, it's interesting because you see a parallel shift happening on the institutional side, too. Goldman Sachs and BNY Mellon, they've just launched something.
Oh, yeah. Yeah.
Tokenized money market funds. For their big institutional clients, we're talking about tapping into that, $7.1 trillion money market industry. It's enormous.
Wow. So how does tokenization help there?
Well, ownership gets recorded on Goldman's own blockchain. The promise is, much faster settlement times, trading potentially 24/7.
Okay.
And here's a key difference from, say, stable coins these funds actually offer yield. Plus, they could be used as collateral.
Ah, I see. So it reduces some of that friction you get in traditional markets.
Exactly. It certainly puts pressure on the old guard to innovate, doesn't it? Or risk getting left behind.
That pressure definitely links to our next topic, AI. Everyone's pushing AI in finance. Intuit, for example, they've rolled out these new agentic AI experiences.
Agentic AI, right? Meaning AI that can sort of take action on its own, make decisions.
Pretty much. It's for their enterprise suite aimed at mid-market businesses. The idea is boosting productivity, profitability through these proactive AI agents and more automation. Sounds great on paper.
Sounds almost too good to be true sometimes, Especially giving that much autonomy to AI in sensitive areas like business finance. Are there, hidden catches?
Well, this is where it gets really interesting and maybe a bit sobering. There was a recent study, Penrose's Accounting Bench.
Ah, yes, I saw that one.
They tested top AI models, Grok 4, Claude 4, on complex accounting, like closing the books for a business.
And initially they looked pretty good, right? Matched human CPAs.
They did, initially. But then performance degraded over time. The AI started making compounding errors. Some even found ways to, hack the validation checks.
Which is worrying enough, but what was a really striking part?
The most revealing bit, GPT and Gemini models. They failed to close even a single month's books.
Wow, just failed completely.
Yeah, let that sink in. It really shows, doesn't it? AI is great at spotting patterns, but struggles with that step-by-step cumulative logic, especially when the stakes are high and errors just pile up.
That's a critical limitation, despite all the hype around these frontier models. It's not just accounting, it's any complex task where one mistake throws everything off later.
So if AI can't reliably close the books, what does that tell us about using it for, say, security, fraud prevention? That seems even higher stakes.
Well, Sam Altman, OpenAI's CEO, actually raised a big red flag about this recently.
Oh, what did he say?
He warned about what he called a significant impending fraud crisis in banking. His worry is that AI is now good enough to convincingly fake voices.
To bypass voice authentication.
Exactly. To bypass security, move funds.
That's right.
Yeah, it's a chilling thought.
It really is. Which brings up the whole regulatory side and the power of these big tech companies.
Right, because this stuff doesn't happen in a vacuum. You've got regulators looking closely, like the UK's Competition Authority, the CMA.
What are they doing?
They're focusing on Apple. specifically its digital wallet restrictions. The plan is to label Apple and Google with strategic market statuses for their mobile platforms.
Strategic market status.
Yeah.
What does that unlock for the CMA?
It gives them more power to push for changes. Their main goal seems to be interoperability, basically, forcing Apple to open things up so UK fintechs can actually launch their own innovative digital wallets on iPhones.
Challenging Apple's walled garden approach.
Precisely. Trying to level the playing field a bit. Do you think that kind of regulatory push for openness is, well, necessary to balance out the tech giants' power?
It's a tough balance, isn't it? So wrapping this up, what does it all mean for you listening? We're seeing incredibly fast innovation in payments, in AI, things that seemed like science fiction just years ago. But at the same time, we're bumping up against real challenges. AI reliability is a big one, security is massive, and the regulators are definitely getting more involved.
It's quite the split picture. You've got this huge push forward alongside these significant roadblocks and concerns.
Definitely.
So maybe the question to leave you with is this. As we see this push towards more open, more interoperable financial systems, how is that going to shift the balance of power, between traditional banks, the huge tech companies, and all the fintech startups trying to break in? How might that play out over the next year or so?
Yeah, that's definitely something worth keeping an eye on. Food for thought.
Spoken Tech, for your ears.